Hey, it's Vinny. Welcome back to the Investment Club. Today, I wanted to give you my quick thoughts on a hot debate topic I'm seeing emerge on whether or not Tesla should do a stock buyback. So I'm going to go through everything you should know, simply put what the point of a stock buyback is and whether or not I think Tesla should. So basically, the stock buyback essentially has two benefits. One, it reduces the amount of shares outstanding, so there are less shares. So if you're a shareholder, your ownership of the business increases because there's less total shares. The second benefit is that it can boost the earnings per share numbers. So let's say Tesla brings in $1 billion of earnings. Well, now that there's, let's say 10% less shares, they earn that much more per share. So the EPS value goes up. And essentially, Wall Street likes to see higher EPS and lower shares outstanding. In the short term, yes, it could artificially boost the stock price. And there are those that are arguing because Tesla has such a massive, cash balance on their balance sheet now, looking like $18–20 billion of cash, that are arguing that that money's just wasting away there and they might as well put it into stock buybacks. And buybacks would obviously be the opposite of when a company dilutes, when they issue new shares. That is decreasing the total amount of shares you own. It's also hurting those EPS numbers. Less shares is better, but do I think Tesla should do a stock buyback right now? Can they afford it? Yes. Does that mean that they should? I don't think this is the right time. And there's a few reasons why. Number one, nothing in this market is guaranteed. We're not out of the woods here yet. It really seems like this market is fragile and could really turn for the worse any day. We're having a bit of a rally right now. We'll see if it lasts. And when you apply specifically to Tesla, all the problems they've faced, we could get more Shanghai lockdowns. They're obviously already facing a higher cost of fuel, commodities. These things eat into profit margins. The Russia-Ukraine war could get worse. And now we've got Russia cutting gas shipments into Germany, where Tesla is trying to ramp up a factory that they've referred to Berlin as a money furnace right now. So any one of these things could really start to throw a wrench in everything very quickly. All of these things, as we saw in the past year, could happen and really, put a damper and hurt the company. So everything can change very quickly, and I think having a cash buffer is much more important than artificially boosting that share price in the short term. And if we just take a quick look at Tesla's balance sheet here, so this is the cash pile that is being referred to. They have over $18 billion of cash on hand right now as of the end of this June quarter we just had. And you compare that to their long-term debt of just over $2 billion. So the balance sheet is looking extremely healthy. Why don't we keep it that way? I mean, analysts like Gary Black, who Tesla bull, he puts out a lot of great info on Tesla, has been pushing for Tesla to buy back $5 billion of stock this year, and then additionally buy back another $10 billion next year. And there's just a lot of problems I foresee with this, like I just said, but then let's get into some of the other ones. You look at the Tesla stock price here. In the last 5 years, this stock has returned 1,100%. Does that look like a stock that needs the help of buybacks to boost the share price a little bit, or do you think they'll just keep going without it? I'm leaning toward the latter. Not to mention all the crazy things we're waiting to see, right? We've got full self-driving, robo-taxis, the Tesla bot. When these things are rolled out, then I think we can talk about buybacks. Until then, I just don't think it's a good use of capital. Here's another great recent example. Airlines buy back lots of their shares. How did that work out when the pandemic started? They had no cash on their balance sheet, and did the buybacks help them navigate during tough times? Absolutely not. The money was gone. It was spent. They threw it into the money furnace. Stocks, had gone up a little bit artificially thanks to the buybacks, and then they crashed and utterly cratered during the pandemic. So I don't think buybacks are anything that Tesla needs to be concerned with right now, right? This is something that I would put in the same category as dividends, which Tesla has kind of said, this is something you do, dividends, when the company has crested the hill, so to speak, your growth is slowing down, and you find yourself in a situation like Apple, where they're still growing, but they literally have like tens of billions of dollars that they have nothing to spend it on, then it makes sense. I don't think Tesla's quite in the same situation yet. I think it will be. And again, if any of these things work out, I think they all will, But full self-driving alone, robo-taxis, the amount of money they're going to have coming in, then yes, it might make more sense. Okay, we'll buy back some shares now. But let's actually accomplish these things first, is the way I'm looking at it. So while things are looking really good right now, we still don't know how we end this year and how next year is going to go, how much free cash flow Tesla will actually end up with. Again, just refer back to any of those 5 issues I listed earlier going on in the world right now. Not to mention, we've got a delegation going to Taiwan, and China had just said, if you do this, we're going to take military action. So, there's just any number of things that a lot of potential negatives on the horizon here that we could face. I think this is a good time to not burn through cash unnecessarily. So while they're calling, Gary Black has called for this $5 billion buyback this year, $10 billion next year, I think we need to let things play out a bit more before jumping into buybacks. We're still in the very early innings here with Tesla. Tesla still has to execute. The economy is looking very uncertain, and it would be wise for Tesla to conserve cash to give them more flexibility. This could be the difference between prosperity and then having to raise money with debt in the future, especially when you factor in the rising rate environment we're in. So just because Tesla's not spending its cash right now doesn't mean they don't plan to use it in the future. Let's think Warren Buffett. Everyone thought it was crazy he wasn't spending Berkshire Hathaway's giant cash pile in 2021. It was ludicrous. Everything was going up, and they were kind of just largely sitting things out and waiting to see how it developed. Well, how did that end up working out when we had this flash crash of 2022 when everything really started hitting the fan? Buffett waited for the right time to get into the markets, and the Oracle of Omaha is on track to do it again, probably going to outperform the market here in 2022 because he waited it out. He waited for an opportunity. They didn't spend cash when they didn't see any reason to. So I kind of relate it back to that as well. And I also just think buybacks as a whole are kind of this dinosaur company practice. Do you think Tesla would rather do buybacks or maintain the freedom and ability to put the money towards something useful to the company mission in the future or help weather uncertain times? As we know, Tesla's mission statement is to accelerate the world's transition to sustainable energy. Does doing stock buybacks help to speed up that progress on that goal? No. Now, another thing to think about too, Elon's been through a lot of crazy market cycles, okay? Even before Tesla, obviously, he was with PayPal and X.com with the dot-com crash. Then we had the '08 crash, the great financial crisis, the pandemic crash. Elon and Tesla have seen how quickly things can truly go south. So do buybacks help Tesla's mission statement of transitioning the world to sustainable energy? No. Do they help prepare for these uncertain times, which are guaranteed to arise at some points? No. So I think it would be smart, and Tesla, I'm sure, is thinking this. They'd rather have protection in a downturn and or the ability to put the money towards something useful over wasting the money on buybacks to inflate EPS numbers and the stock price in the short term. Has Tesla ever made a decision that was short term? No. Everything with this company is about long-term vision and execution. So if buybacks have a material positive on the long-term goal of the company, then by all means, they should do it. But I think right now, Elon and Tesla are going to look at buybacks the same way they look at dividends. This is something to do when we crest the hill. You don't start paying dividends until you've crested the hill, your growth rate has slowed down. That's when I think it would make more sense to do buybacks as well. And this is, like I said, what we've seen with Apple. But when there's still so much work to do, buybacks here would seem premature and unnecessary. It'd be an unnecessary risk because, again, having a buffer may be so crucial. As we've already seen in the past year or two, companies that were, had healthy balance sheets, they're the ones that survive versus ones that are over leveraged, indebted, much harder time and a much higher likelihood of bankruptcy. So you've seen analysts calling for buybacks, but who knows more, the analysts or Tesla's finance team? I mean, they're obviously aware that buybacks are an option, but they probably see a better use of that capital, or again, in a worst case, having the cash buffer to weather uncertainty in tough times. Another issue that this helps with, I'm seeing a lot of the bear arguments for Tesla is that Tesla is priced like a luxury automaker. These cars, they're expensive. The base price on the Model Y, let's say, is somewhere around $60K right now. Obviously, they've been going up because of inflation and everything. And I think in a couple of years, we're going to see these prices start to come way back down, and they will be more affordable than even a Toyota Camry, let's say, when you compare the Model 3 to a Toyota Camry and the fuel and maintenance savings you will have. It will become a no-brainer. But anyway, just for argument's sake, play devil's advocate here. Many say Tesla produces luxury vehicles, and obviously there is a ceiling for demand on luxury cars where you're going to get price out with a majority of potential customers. So if that's true, We know Tesla 2022 is sold out. You want to buy a Tesla, you're not getting it till 2023 if you put in an order now. There should be no demand issue if nothing were to change with the models the next 2 years. But let's say we get 2 years out and a demand issue does materialize and we've got more competition, blah, blah, blah. I think it would be more useful to save a lot of that cash to help get through those tough times than to blow a good chunk of it right now to do buybacks, which when these issues arise, buybacks don't help you. So the lower the stock price stays, it also has other benefits. It benefits employees. The employee stock purchase plan, they're able to buy more shares. So while analysts and fund managers are all pushing for buybacks because they as Tesla shareholders will directly benefit, long term, I think Tesla will make the right call on the best way to allocate their capital. And it's laughable to think anyone outside of Tesla, not you, not me, not Gary Black, not any hedge fund manager, knows more, than Tesla. Tesla has all the data. They know a lot more than us outsiders looking in, and they are going to put that money to what they see fit as the best use. And I don't think anyone from the outside could make that call better than they are able to. So with all our uncertainty, our limited data, looking from the outside in, and all the opportunities that I see ahead, buybacks just seem silly to me at this time. Again, buying back shares or distributing dividends is a sign of a company growth slowing down or stopping, or not having any new projects or things they think are worth spending money on. Tesla is a young company with plenty of potential. They should keep that cash, use it to keep building gigafactories, to work on these other awesome, exciting, developing projects and products. Okay, we've got a couple new products probably coming in the pipe in here in the next couple of years. Hopefully finally get the Cybertruck. We get this autonomous robo-taxi that could fit 15 people. So those who are suggesting share buybacks or dividends, I think, are very short-sighted, and long-term, there's much better ways to spend this money. So let me know what your thoughts are in the comments below. If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.